What's going on, everybody? I hope you're all having a great day, and in this video I'm going to be talking to you about is a supply shock about to hit the housing market. Guys, we have a ton of people in mortgage forbearance. It went from 7.2 million to now 1.5 million. It dipped, but I'm going to explain to you how that 1.5 million can completely shock the housing market. And for those of you who've been waiting on the sidelines, this may mean opportunity for you. Guys, if you get value from this video or enjoy it, please don't forget to hit that free like button and let's dive into it. So check this, on September 30th, 2021, the extended mortgage forbearance is coming to an end. And actually there is talks that there has never been a mortgage forbearance to this extent coming to an expiration date. And that's what's causing a lot of fears for many. Fears in the sense of uncertainty. The market's just really not knowing where the direction's gonna go. Now at the highest peak for mortgage forbearance, it was at 7.2 million borrowers were taking that mortgage forbearance because they needed help. They joined that program needing assistance because they couldn't cover their mortgages. Now, as things got better, it says that unemployment dropping from nearly 15% in 2020 of April to 5.2% as of August 2021. That, of course, helped borrowers who were in the mortgage forbearance program to opt out of it because there was jobs and there was opportunities and the market was trying to recover. Right now, there is currently 1.5 million borrowers who are still in the mortgage forbearance program. Now, I'm going to explain to you in detail about this 1.5 million and how, even though the number might not seem like a lot, it's actually a whole lot to be concerned for. Many of the borrowers who are protected with this program are going to have two options. Number one, they're going to have to resume their mortgage payments when that program expires for them, which it did for many in September 30, 2021. And we're making this video in October, so it's also going to be expiring for people in October. So they're going to have their two options, either to resume mortgage payments or number two, sell their home. Now, what many need to understand is you cannot expect these homes to be like 2008 and flood the foreclosure markets. The difference is now the market is extremely hot, and anyone who owned a house, typically, I mean, you would say majority, if all, actually have premium in equity because house values have went up, appreciation has been up, and we all know that. So they're gonna have a very good option of selling their home without having to go to the auction, and they're gonna be able to get top dollar for it. As you all know, the market that we're all struggling in, helping clients buy properties or you yourself trying to buy properties, it's not easy. So when these borrowers come out of the program and list their house to sell, they're gonna make money and they're gonna sell it in days, if not hours. Now, this 1.5 million borrowers who are in mortgage forbearance might not sound a lot compared to the 80 million homeowners that we have in the nation, but let me explain why it is. A recent study by NAR, the National Association of Realtors, stated that there are only on the market today 1.3 million homes for sale. Now, how much did I say are in the mortgage forbearance program? 1.5 million. So we're saying already that there are more people in the mortgage forbearance program than there are homes for sale. Are you kind of connecting the two together? Now let's assume that these 1.5 million borrowers, they all go to the market and sell. That's not going to happen. You're going to have some who decide to not sell and resume mortgage payments. You're going to have many who say, no, I just want to sell and just start everything over. So let's assume that they want to hit the market. You're talking about the houses for sale on the market right now is 1.3 million homes. You're talking 1.5 million come with that 1.3 million. That's 2.8 million homes now. Double and some change of how many homes there is currently. That means that the supply is going to have a shock. The housing market is going to have a shock. Sellers are going to have a shock because now buyers have more options. Now let's take a step back. We know that not all 1.5 million homes are going to go for sale. But it doesn't matter, guys. It doesn't matter because no matter what the percentage is from that 1.5 million, it's still going to be a shock. 10%, 20%, 30%. Imagine 100, 200, 300,000 homes going to the market with already such a limited supply, how much that's going to give more options for buyers. Now, one thing important for you to know is that not all borrowers who are in the program will be kicked off the program at one time. It'll be phased off in chunks through 2022. But the largest group, listen to this, the largest group coming first is estimated to be 452,000 borrowers will leave the program in September 30, 2021, which already passed, all right? Then, following that, it's estimated in October 2021, which we're in right now, is 287,000 homes, borrowers basically, that are set to leave the program, which totals 739,000 borrowers are going to be out of the program. Now, look at the amount of potential that there is 739,000 borrowers who left the program that were financially unable to pay their mortgage, now having to make a decision. I might make a lot of money selling my house. Maybe let me just do that and restart everything. Look what's going to happen to supply. Now, a Zillow research attempted to answer this question with a study. Now, the question of how many from the 1.5 million borrowers are actually going to sell their home versus resume paying mortgages. And something important to note is this study that was done is based off of the last mortgage forbearance that had a percent that exited, and from that percent, those guys listed their homes for sale. So that's how they're kind of basing off this research with. And they're saying that it's an estimate of what they think is going to happen. And from the 1.5 million mortgage forbearance borrowers, they're saying that an estimate of 25% will opt to sell their homes. Now, it's highly possible for these 1.5 million who filed an extension to be in a worse position financially than last year when the study was done of how many listed their homes for sale. Because those who got out last year were able to either resume or sell their homes. This year, these 1.5 million filed more extensions, so financially they could be in a worse position, meaning it might not just be 25%. What if it's 50%? Zillow researchers actually write that the housing market could see a significant deterioration from current conditions if it becomes 50% of that 1.5 million borrowers listing their home for sale. You know why? Because supply will be shocked in the housing market. 1.3 million homes for sale, and then you go flood another 750,000 plus homes in the market for sale. It's going to be a shock, and it's going to be a positive shock for those looking to buy, a negative shock for sellers, and this could be a reason that the house prices start to cool down. Now, keep in mind, from April 2020 to April 2021, inventory has dropped 53%, so there isn't much inventory. As soon as a house gets listed, whoop, people swallow it. As soon as it gets on the market, boom, it's under contract and sold. That's how houses have been moving. Now, the market as of today, though, it's been gaining more homes to be sold right now, currently, and it's inevitable. You know what I mean? People who've been putting offers on homes and losing, they get tired. They're like, I'm just gonna quit. I'm not gonna keep looking for homes. Sellers who are trying to sell their homes and ask ridiculous numbers, buyers are like, I'm not gonna pay these premiums. The home's not worth it. These sellers might be crazy trying to get that number. And also, many homeowners are just like, hey, the pandemic is kind of behind us now. I've decided to list my home for sale on the market, and that's what's also creating more supply. That's not to say that supply is still not low, but it is to say that supply is picking up, which is a good sign. It's a good sign because it gives you more options, and when you have more options as a buyer, you can negotiate more and actually get the house that you want. So there you have it, guys. A supply shock could hit the housing market because of the mortgage forbearances that are right now slowly exiting out of the program. I know it sounds interesting to you, and you're excited, and you're like, woohoo, finally I can find myself a house, and that might be the case. We're not talking about a housing crash. We're talking about more options. We're talking about you can possibly negotiate more. I'm already seeing it right now. We're talking about there's more reasonability, if that's even a word, for listing the houses on the market. Sellers were just going crazy earlier in the year. They're like, my house is worth $400K, but I want 600K, so I'm just listed for 600K. And for some reason or somehow they would get it. Hopefully that's not going to be the case today and then as time progresses. So for those of you who are actively looking to buy a house, this is good news for you. For those of you who want to sell, you might want to turn a little quicker and make the sell. And most importantly, for all of us who just want somewhat of a correction in the housing market, not a crash, just some balance, this could be good news for you. Anyways, guys, I hope you enjoyed this video. If you did, like I said in the beginning, hit the free like button. I'd appreciate it. And most importantly, I upload 3 times every week. Hit the subscribe button. I talk about real estate, money, and business. And if you don't want to miss out, you want to make sure you subscribe. Anyways, guys, thank you all so much for watching. I'll see you in the next video, and I'm out.